India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning and welcome to Bazaar Morning Call. Well, it's the last 7 days of the year 2024, and if you're wondering why the old war horse is back, it's because our two little ones, Mangalam and Sonal, have become parents. Many congratulations to all of us here. And there you are. And the other big reason why I'm here is the boys are absconding. It's going to be women power this week.
Absolutely.
Hi, both of you.
Lata, good to have you back in the studios. This is a nice welcome change. So I'm sure we're going to have a pretty packed next 2 hours to 2.5 hours ahead.
Yeah, looking forward to it, Lata. We missed you on this chair.
Thanks a lot. Thank you very much. Well, actually, I'm trying to clutch at straws here, actually, as we look into the week ahead or even into the next trading day, the next 8 hours. See, the Nifty saw its worst week in 30 months, worst week since June 22nd last week. But this week, the straws I'm clutching at is first that the US inflation number, PCE inflation number, it was worse than November. November was worse than October, but it was better than what the market expected. And so we saw that rally in the US stocks. The other positive is that the US shutdown has been escaped. Both the Senate and the House have passed the 3-month spending bill. So at least that's not an overhang, a sword hanging on the market. Coming to India, there is a bit of a rate cut expectation. The minutes of the RBI MPC came out on Friday evening after markets closed, and the one member from the Reserve Bank who continues to the next policy, Dr. Rajiv Ranjan, indicates that, they are in the process of cutting first CRR cut and then wait for the data and then cut. So it looks like a cut is more likely than not. So all those are the positives, though, of course, a cut can mean negative news for banks initially because they will have to bring down loan rates. But it's positive for realty companies, NBFCs, generally corporate India, as cost of capital falls. So that could be the positives I'm clutching at. But I have to mention the negatives. FII sale, 3,600 crores nearly, even on Friday. And why was that? I mean, you just look at the data. If you are a foreign investor and as you hold the dollar, it becomes more expensive. It buys you more rupees. If you're holding it in rupees, of course, you get 6.7 in terms of interest. But the shares you are holding, I'll just pull out that table. If you've bought Indian shares, the Nifty is down 2.25% for December. For the year, it is up only about 8.5%. Whereas if you held dollars and US shares, the year you would have made 30.5%, and plus your dollar has appreciated. So even if you liquefied into cash, you can buy more of any other currency. Yeah. So, the temptation, when will they stop selling is what we have to wait.
No, Lata, we were counting on the fact that it's December, so holiday mood and all. No sign of FPIs being on holiday. Now, will this week be any different now that we're finally in the Christmas week, which is why I'm going with, will there be some Christmas Santa cheer finally on the street?
I think so, right? Looking at the Asian market picture, there is a rebound after reeling with losses last week.
No, absolutely. And one would hope for that because last week was absolutely crunching and back-breaking. More on the data and numbers in just a bit. But okay, so what do we have? We have positive close on Wall Street thanks to the inflation numbers that came in. And that was a very well-tracked, well-watched number, that PCE index, because that's what the Fed goes with. And the Fed is what spooked the market so much by saying we're cutting twice probably next year and not 4 times. The CBOE VIX in the US was also down quite a bit on Friday. So there was about a 23-24% drop in the VIX. And the US move was very broad-based. It wasn't just the Magnificent 7 taking the Nasdaq higher. All the indices, Dow, even Russell 2000, S&P, everything was up around 1%, a very broad move. Now, coming to the PCE itself, while the market cheered the fact that month on month the rise was not much, just 0.1%, which was lower than estimates, just keep your eye on the trend as well. Because if you're looking at the last couple of months, then the number has been inching higher steadily. 2.1% in September, 2.3% in October, and the November annual print, year-on-year rise, is 2.4%. Anyway, the market wanted to hold on to some positive news, so it was not just equities. You saw that in the dollar. The dollar cooled off a little bit. In fact, it slipped to below 108. There was a little bit of a cool off in yields as well. The US 10-year yield, for instance, was down 4-5 points, and the dollar index even this morning is down about just below 108. So let's see if this holds. For our market, the crunching FII numbers that Lata was alluding to, that is what's really breaking the markets back, because there's no let up in that FPI selling number. We broke below the 200 DMA on Friday, so now the Nifty is under the 20, 50, 100 and 200 DMA. The next level in question is going to be the lowest point of this correction, which is a November low, which is still a distance, about 300-400 points away from where we are. But let's see, whether we actually get there or not. The total FPI selling last week, just to put the numbers in context, is over 15,000 crores. And on Friday, domestic institutions couldn't entirely offset the 3,600 crores that was sold, which is why you had a near one-way trending market down and the end near the lows of the day. Just some points in terms of, more stock-specific action, we'll get to it. The GST meeting was a big talking point over the weekend. Now, no major announcements, because a lot of the well-tracked issues, for instance, e-commerce, quick commerce, and the health and life insurance reduction in rates, all that has been deferred. So no changes over there. So we'll sort of track that. And
you know what they did, right?
The popcorn.
The popcorn. They've issued a clarification on that.
Yeah.
So basically, if it's just salted, then it classifies as a namkeen, so 5%.
Yes.
If it's pre-packaged and labeled popcorn, 12%.
Yeah.
But if you're caramelized popcorn, then it classifies as a confectionery and therefore 18%. But the official statement says that this is just a clarification because there were some disputes arising out of the interpretation.
Yeah.
But that was a talking point.
Abhishek had a problem. He showed me a packet of salted caramel popcorn.
That's true. You actually get the mix and match. I think that will be the council's next round of deliberations. So popcorn definitely made lots of headlines over the weekend. Finally, one more important headline. We all know that the steel industry has been clamoring for some support, some safeguard measures. So the DGTR has initiated, not the duty hasn't come in, but they've said that they're initiating an investigation into whether there is really dumping and how much of it, and then which countries to look at. So that would be perhaps a positive for some of the steel players. So plenty of news over the weekend as well, Rima.
Plenty of news, and the big one is it's a holiday shortened week.
Oh, yes.
So Wednesday, midweek, is a holiday for Christmas, 25th of December. There are no domestic cues to watch, so focus will be on global indicators like US bond yield, the dollar index, the initial jobless claims, the new home sales data arising out of the United States. But this week, on Thursday, we've got the December monthly expiry. So that could add to the volatility. And plus, demand for IPO is still running very high despite the severe correction that we had last week. So far in this month, there's a report which says that IPOs have raised nearly 25,000 crore rupees. And today, there's one IPO, Unimec Aerospace. We'll talk to the management. Their 500 crore IPO opens up for today, but there are lots of listings on the main board. So Transrail Lighting, DAM Capital Advisors, Mamta Machinery, Sanathan Textile, Concord Enviro Systems. These are all main board IPOs, which will be listing on the 27th. That's a Friday. But I think we should pull up Asia once again, because there are some big moves that you're seeing. So Taiwan is up close to about 2%. Hang Seng Straits is a gain of about 1%. Hang Seng is up, 0.2%, but Nikkei in Straits is up nearly 1%, and Taiwan is leading with gains 2.5% up.
In the Christmas colors, red and green, the market has had lots of red over the last week or so. Perhaps it will hope for some green now. So let's kick things off with the equity call of the morning. Jonathan Garner of Morgan Stanley says that they have added Reliance Industries to their Asia-Pacific ex-Japan and GEM focus lists while removing GAIL. He says that they have added Reliance Industries and believe key challenges have been priced in across key verticals. From here, their analyst expects refining margins to recover after two tough quarters, and the team notes that permanent refinery capacity shutdowns have also risen. He says RIL's free cash flow engine should pick up pace as 0.6 MBPD of refining capacity shuts down in 2025 globally, and demand growth should outpace capacity addition meaningfully.
Okay.